BIS commodities, and let's just take a look to see where we closed on the commodities for the week in this weekly review. Starting out with Dees corn, we closed a penny and a half lower in the Dees contract today at 333. We did make contract lows for the December 16 corn down to 322 and a half. November beans closed up a little over 7 cents on the day at 981 and 3/4. Sep wheat up 6.5 cents on the week at 422 and a half. Taking a look at livestock, cattle closed an August contract $1.35 lower at 116.32. We did see the last trade for hogs today in the August contract at 67.15. That was the close. October closed at $60 today. That's up $1.70 on the week, and it looks as if oil is going to close higher on the week, roughly about $2.50 or so at the time of this trade, right around that 44.50 area in the nearby Sep contract. And the dollar looks as if it's going to close a little bit weaker on the week as well, down around 44 points, somewhere around that 95.70 area at the time of this broadcast as well. Taking a look at the greens for the week, we did see a quiet trade for the most part this week, anticipating today's monthly supply and demand report. And this is a report where we take a look and actually throw some yield estimates out there for what we expect to see in the next couple months. And all eyes were on what type of yields were we going to see, and again, how do we offset that on the demand side of the balance sheet. Going into the report, we had 168 for our corn yield last month, the trend line yield, and the trade was looking for a bump in estimates. The average trade guess was a little over 170 bushels an acre. The whispered number was up to 172. The USDA shocked us with a 175.1 yield in this report, larger than anybody anticipated, right at the top end of the ranges of anticipated guesses out there. And a couple things to come and factor with there. One, crop ratings have been very good at this point of the year, and also we're seeing the USDA use a record ear weight number here, and I suspect in weeks to come we're going to debate these numbers as well. So we did see an up push in that yield. Now when we plug that into the balance sheet for new crop corn, we were coming in last month at a carryout of 170 from old corn crop stocks, and that's where we stayed today. We fudged a little bit on the demand, but we still are going to bring in a 1.7 billion bushel old crop corn carryout. You plug that carryout in the new crop, that gives us a 2.4. We came in with a 2.08 billion bushel crop, so that larger crop production number really upped our carryout. We did increase demand against that as well. In fact, we're throwing some record demand numbers out there in the feed and ethanol usage numbers against it. So we did see an increase in demand to help offset some of that blow, but that's still a much larger than expected number. I shouldn't say very, but it is a bearish number thrown at the market. The corn market reacted very strong today on the close against those trade estimates. So maybe the trade was actually trading a little bit larger number at this point. I do think we did see some end user pricing on scale backs down in here as well. And again, we're going to debate this number for weeks to come. But I think the key is here that the top side is somewhat limited at this point in time as well, as it's going to be hard to damage this crop or drive this yield down in months ahead. I suspect we're probably going to be stuck in somewhat of a sideways trading pattern, and not to say that we can't go lower in this market. We'll probably see some end user demand down at that $3 level in Dees corn, but the top end of this thing is certainly going to find some resistance as well with such a large crop and a large demand base, or will need a large demand base to help offset some of these bushels. Taking a look at November, or taking a look at the beans today, how that report came about. We did up the bean yield larger than anticipated too, just shy of 49 bushels, 48.9 bushels an acre. That's up from last month's trendline yield at 46.7 bushels. The average trade guess was 47.6, so much larger than anticipated yield out there as well. Crop ratings have remained very good to this point in the season. Weather is projected to be wet the balance of the month across the grain belt, the month of August, and actually cooler temps are projected to come into that 8 to 10 day time frame. So we did see a much larger than expected increase in yield, but we also did see a very large increase in demand as well in the old crop. We did raise our demand 95 million bushels, essentially dropping our carryout 95 million bushels down. So we were looking at 350 for a carryout for old crop beans last month. We're down to 255 this month. This was a much larger cut than the average trade estimate, somewhere around that 320 area. So that was bullish on that end with the huge demand we had in place. And again, that demand came mainly from exports to match the very strong buying we've seen from China in the last couple weeks. Also, we did see an increase in the crush as well. But once you plug that large number into the new crop balance sheet with a very large demand out there as far as crush and exports for the upcoming year, we did see the carryout increase up to 330 million bushels. That's up from 290 million last month, about a 40 million increase there, and it's up higher than the average trade guesstimate as well. So the bean numbers today, a little confusing for the trade, I think, with the large numbers, the larger carryout in new beans, and the smaller carryout in old beans. So I would guess the bulls got what they wanted with the very large demand number, and the bears got what they wanted today with the very large supply number. So we got big crop, big demand. As we move forward here, again, I mentioned the weather forecast is what the trade will be looking at. Also, the trade's going to continue to look at demand and basically China. Are they going to continue to come in here and still support and buy these prices? Are they going to be patient as they're trying to auction off state reserves every Friday, as they have been for the last 3 weeks as well? It'll be interesting to see what we foresee coming in weeks ahead. Taking a look at the livestock markets, we've seen cattle trade sideways this week. A lot of volatility the last couple days of the trade, very choppy, volatile, and a little bit weaker. Some near-term resistance on the October charts up there at that 116 area. We tried to get through it all week. We couldn't get up and through it, couldn't get up there to close up there. Longer-term 120 is probably an area of resistance up there in the October. We were able to bounce off the bottoms down there, about $10 or so at the bottom. So we've seen a sideways trade. It's going to be harder to push this thing higher. We've seen a grinding higher type cutout this week. As of this broadcast, very little cash this trade. We're looking for a 118 trade, mostly in the south, 287 in the Midwest. Auction receipts were a little bit weaker from the sales barns this week. But again, we're probably going to be looking at a trade coming out later this afternoon or tonight. Cash, that is. Hogs. Cash hogs week on the week. We've seen them weaken a little bit as the August contract expired. And we've seen a very volatile, choppy trade the last 2 days in hogs as well, as it pushed down, pushed up. Maybe we were trying to carve a bottom down in here. I think the key for hogs from this point forward is we do have a large supply coming at us. We've had some good exports to this point in the year. We're above last year at this time frame for the month of June. I think the key, though, is where is China going to come into this equation? We're looking for huge imports/exports to China. We haven't seen that to date, and I think that is certainly going to be the key over the next couple months for this hog market. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.